Hello investors, I have come up with very interesting topic today which is all about FD and your investing strategy. So everybody is talking that, especially the YouTube influencers or the market veterans, the so-called market veterans, or the media is telling that the inflation is beating your FD returns. So your inflation is much high, say 6.5%, and your FD returns say it is 7.5%, but post tax it is much below the inflation rate, and the inflation is effectively beating your returns. So let's decode it and let's find out if this is correct or not. So let's consider a person who is having the highest tax slab as far as the retail investor is concerned, say 30%. So let's first understand what is an inflation. So inflation is nothing but the increase in the price of goods and services year on year. Say every year your price of goods and services you buy and utilize increases year on year. Say let's consider 10%. Currently it is like 5.5 to 6%, but still I'll consider a higher percent just for calculation purpose. So let's consider you are investing 10 lakhs into FD, and FD these days you are getting interest as high as 7.25%. So let's consider that only 7.25% interest you're getting. So this 7.25% is effectively for a 15 months FD. So let's consider 15 months only. So for simplicity of calculation purpose, let's take it as 7.5%. So it's like 75,000 rupees you get after 15 months if you are investing 10 lakhs. Now, as I told, you are having a tax slab of 30% and you are again having a additional cess of 4%. So effectively you lose 30% plus a 4% cess as per the income tax rules. So you will get effectively, after deducting this tax and cess, you will get around 51,600 rupees. So this is something around 5.16, rounded to 5.2% interest, and not 7.25 or 7.5%. So the market influencers or the YouTube influencers, as they say, they can tell that 5.2% is much below your inflation, which is above 6%. So if you are putting your money in FD, you are not beating the inflation, and inflation is beating you, and you are losing the money power. So you have to invest actively. You have to keep investing every day. So basically that's what they tell, right? So let me decode it. Say we are value investors. So me as a value investor, say I am having this situation. So market is all time high. Market in the sense the stock market is at all time high. The indices are at all time highs, Nifty, Sensex, everything. But maybe your portfolio may not be at all time high or maybe at all time high. So let us assume that it's kind of at all time high, and majority of your stocks is at all time high. So there will be some of the stocks which may not have reached their all time high. So there will be still firepower remaining in them to reach their all time high. But generally speaking, probably your portfolio is at all time high. So you must be considering, as a value investor, booking some profit, a part of it, and staying in cash. So a partial profit booking for very highly valued stocks is always advisable, because if the valuations are stretched, then we as a value investor becomes uncomfortable. So it's time for you to rebalance. So you may book that stocks, a part of it, because the business is good, the management is still intact. So you may consider partially booking some profit. And also it's time for you to clean up your so-called kachra stocks or non-quality stocks or overvalued stocks. So from those also you will get some profits and hence the cash. So say this 10 lakhs is obtained by these activities by a value investor, and then me as a value investor, this 10 lakhs I am investing in FD. So I am effectively getting, after 15 months, say 5.2% or even say 5%. Now if you see the market is currently all time high, now you will have some geopolitical events or some macroeconomic events like your US election, Fed rate cut, or any other macroeconomic events. So this can lead to a market correction. So market may not correct so deep, say let us consider a very conservative 20-25% correction, or even say 20% correction. So your stocks, maybe your holding stocks or the stocks which you have put in your wish list, for which you are waiting for the price to come to your buying price, considering the higher valuations at the current levels. So if you get the correct price, then you can always enter that stocks at a discount of 20 to 30%. Because if the overall index is at 20% discount, your stocks may nosedive even as low as 20 to 30%. So if you get such a correction, then you can always enter into that stocks. So how will you enter into that stocks if you have a correction? You should have cash. So this cash is by liquidating your FD. So as I told, you are getting a 5% interest from FD, and additional you are getting a 20, 25%, 30% discount in while you are investing in this stock. And say the correction is over and the market is climbing up again. So your stocks also climbs up. So this 5% return from your FD post all your tax. In addition to this, say the market climbs back up, say another 10, 15 or 20%, then your stock may climb up as high as 30, 35%. Again, considering a conservative 20% or even 15 to 20% rise in that stock. So 5% plus 20%, 25%. So with this simple strategy of putting your money as a mature investor when the market is all-time high, booking your profits, remaining in cash, and reinvesting that money when the market corrects, and then gaining profit as the market goes up, is fetching you more than 25% returns. The 20 plus 5%, which is all conservatively calculated. So this percentage can be much high if you effectively do a value investing in a proper step-by-step procedure. So if you are following our channel, you would have known all these facts and strategies by which you can make multiple multi-bagger returns. And if you see the influences, as they say, FD returns is of no use and inflation will beat you if you are investing in FD. This is, as per me, utter nonsense. Strategy is what matters. Just creating a YouTube content doesn't value add to any of the investors. You should strategize. You should have your own analysis. You should have your own investing principles in place, and you should not invest based on hype. So if you do this, then I'm sure you will beat the market. You will beat all the traditional investing tools available, and you can create ultimate wealth. So stay invested. Don't deviate from our value investing principles, whatever happens, because this will only help you eventually earn sizable profits. So I'll come up with an interesting another new video in our channel. Till then, stay invested. Happy investing.